Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The yen gains after the Bank of Japan raises interest rates to 0.5%, the highest level in 17 years. The BOJ hints at more hikes to come. Plus, Trump tells Davos he wants OPEC to cut oil prices. We bring you reaction from the World Economic Forum, as well as conversations with the CEOs of Suntory and pharmaceutical giant Merck. Asian equities gain as Donald Trump tells Fox News he'd rather not impose tariffs on China. The US president also urges the Fed to cut rates, saying he'll speak with Jay Powell at the right time. Good morning, happy Friday, everyone. We're going to get a check on your markets, but before we do that, a redhead crossing the terminal confirming Bloomberg reporting that Monte Paschi di Siena will and is in the process of buying in an all-share deal Mediobanca. So more consolidation, it seems, in the Italian banking space. The details then, Monte Paschi di Siena offering to buy Mediobanca in an all-share deal. They are offering 23 new shares for 10 Mediobanca shares. So Monte de Paschi offering 23 new shares for 10 Mediobanca shares. The offer for Mediobanca is at a more than just over 5% premium, it seems, from the close yesterday. So confirming Bloomberg's reporting that Monte de Paschi is exploring that deal to take over Mediobanca. We'll get more details on this story for you. Of course, Monte de Paschi is seen as the oldest existing bank, dating all the way back to the 15th century. More details on that potential deal throughout this hour. Let's check in right now on some lines dropping from the telecom equipment maker Ericsson as well. So from deal making to the earnings story, Ericsson fourth quarter networks adjusted gross margin coming in at 49.1%. The estimates had been for 48.2%. Let's see if I can get the top line for you. Adjusted gross margin coming in above the estimates. We know there's a focus on the India operations and North America. There had been an expectation that the numbers in this most recent quarter might be a little softer, given the strength that came through in the third quarter on the back of a $14 billion deal with TNT. Currently, Ericsson seeing first quarter cloud software sales similar to their three-year average. In terms of full-year dividend per share, they're looking at 2.85 Swedish krona, just slightly above the estimates. And in terms of adjusted earnings, here's the top line then for Ericsson. Fourth quarter adjusted earnings, it is a miss, coming in at 9.8 billion Swedish krona. The estimates had been for 10.35 billion. So that is the earnings story coming through from Ericsson. In terms of fourth quarter net sales, just slightly above the estimates. To the markets now, let's get a check of the markets because we have seen some decent gains, of course, coming through for European equities. You've had, 7 straight days of gains. You're set for an 8th straight day. We look at futures in Europe pointing to gains of around 0.4%. I hope we can get these markets up for you. In terms of US stocks, hitting a fresh record high yesterday as well. We'll get the full deep dive on these markets in the next couple of minutes for you, because we do need to check on where things stand, particularly across FX and fixed income as well. But record highs for European and US stocks. Let's get to the story in Japan. The Bank of Japan has raised its key policy rate to 0.5%, the highest level in 17 years. This as Governor Kazuo Ueda continues his mission to return to central bank orthodoxy. Let's bring in Taro Kimura from Bloomberg Economics in Tokyo. It was expected, of course, but nonetheless, another historic move from the BOJ. What has changed on the outlook? Because that, as well, is important.
Right. Of course, the rate hike today was widely expected. But what was surprising was the tone in its latest quarterly outlook report. Means its official inflation outlook was lifted up, not just securing 2% further, but as well as it reveals the policy board is now tilt to alert to the inflation overshooting, because surprisingly for the fiscal year 2025, they lifted up from previous 1.9 to 2.4, 0.5 percentage point, as well as evaluating that the risk is further towards the upside. So that's why the BOJ's communication, I felt it's shifted from they're still concerned about securing 2% inflation to they secured inflation as well as now alert to the overshooting of inflation. That's probably a clear sign that the BOJ is now pressing ahead with normalizing policy again. And I was expecting those hawkish BOJ, but market wasn't actually priced in. But now it's clear. So I don't expect my baseline scenario that the BOJ will comfortably proceed with another rate hike, probably in April and also July up to 1% if there's no significant setback from the market or politics.
That's really interesting. So your analysis is they've met that 2% target. Now they're looking at a potential overshoot when it comes to inflation. You still expect to get to 1% by the second half of this year. What are you going to be listening out for when it comes to the press conference from the governor in 30 minutes' time in terms of building out that view?
Of course, the market's eye and my eye on whether there's any hints on further rate hike, but I expect he will steer clear because he wants to avoid any spike in the end and probably the jolt in the market as we saw in last summer after BOJ lifted rates in July. However, we have to listen carefully to Ueda's estimation on inflation outlook. Particularly, the reason they flagged in the outlook report was surge in the rice prices, which is the staple for Japanese diet. And if the Ueda says those rising prices will spill over to further service prices, such as dining out fees or long-term inflation expectations, if he says so, it's going to be another hawkish signal from Ueda. So anyway, price outlook and rate forecast is important to watch, and yen's probably swing depending on his steering.
OK, really excellent preview as we count down to that press conference, of course, when the governor of the Bank of Japan after they raise interest rates to 0.5%. Bloomberg Economics analyst Taro Kimura in Tokyo with that reaction and the preview. Thank you. Let's check in on assets in Japan and China as well, because with the comments coming through from Trump on tariffs around China, that is moving markets in China, the mainland and Hong Kong. Let's bring in Avril Hong for a check of the Asian story. Avril.
Yeah, Tom, let's start with Japan first, because I think the expectations coming into today was that it was going to be a dovish hike from the BOJ, and then Ueda would have to sound hawkish to talk up the Japanese currency. So yen bulls seem pleasantly surprised, and I think the immediate support levels on dollar yen are around the 155 handle. Certainly, there are those that think they're primed for gains on the Japanese currency. Of course, we'll have to wait and see what Ueda ultimately says. But you look at how the Nikkei and Topics have already erased the gains of as much as 0.6% earlier in the session. And as you say, that Chinese tariff line from Trump really moved markets. So we've seen the outperformance of the Hang Seng, 2+% gains today. It's also played out on the currency. If you take a look at this next page, I'll show you how the offshore yuan today really steep moves, about 0.5% climb against the greenback. And this is really capping off a week where this tone from Trump on China has just sounded a lot less antagonistic than markets had been expecting. And you think about that phone call at the start of the week, the TikTok reprieve, and then also that talk about 10% tariff. So the yuan actually headed for its best week since August, Tom.
Avril Hong in Singapore on the Chinese asset reaction with the yuan in focus, of course, offshore. The strength coming through, up around 0.6% so far in the session on the comments from President Trump. Talking of which, President Trump says he'd prefer not to, as we discussed, have to impose tariffs on China, suggesting a trade war between the world's largest economies may not be imminent.
We have one very big power over China, and that's tariffs. And they don't want them, and I'd rather not have to use it. But it's a tremendous power over China.
Well, those comments came after Trump addressed world leaders in Davos, again threatening tariffs and calling for lower oil prices. Let's bring in Jemana Paschi, who, of course, is at the World Economic Forum for us. Jemana, break down Trump's latest comments on China then, and how it plays into what he was discussing, his comments to executives in Davos yesterday.
Yeah, well, it's all happening at dizzying speed, Tom. It's quite difficult to keep track of what Trump's priority is from moment to moment. But I thought it was interesting that he does seem to be, or has in the past 24 hours, seems to be downplaying the threat of using tariffs against China. And remember, on the campaign trail, he was talking about imposing tariffs up to 60%. At the beginning of the week, he was talking about tariffs of 10%. And now in an interview with Fox, he says that he may not have to use them at all. So it's really unclear at this point what actually is going to happen in terms of implementation. But then at his address yesterday in the Davos Congress Center, and of course this happened by video, he did not attend in person, he did also mention tariffs and the fact that in the case of Europe, for example, the deficit continues to be too wide. He also said that he wants to see non-American companies invest and manufacture in the U.S. And if they don't, then again, he's going to wield that one economic sword that he's been talking about all this time, and that is tariffs. So it's very clear at this point that he sees them as sort of like an economic negotiating tool. And you will recall that when he sat down with our own editor-in-chief, John Micklethwaite, he said tariffs is his favorite word in the dictionary. But I think the messaging from a lot of executives, and there was a lineup of them at that video address yesterday, including the likes of Anna Botín from Santander, Steve Schwarzman, Total Energy CEO, and Brian Moynihan from Bank of America. The feedback from American executives is that they're excited about the prospects for U.S. growth this year. But in the case of Brian Moynihan from Bank of America, Trump actually quipped at the end that he would like to see the bank, and this is a quote, open up to more conservative consumers. He used it as an opportunity to direct some criticism at Bank of America for some of their DEI initiatives. So bringing in some of the culture wars in the U.S. into that conversation as well. And then finally, and this is obviously a topic that we're very interested in, well, I'm very interested in, given the region that I cover, there were lots of comments directed at OPEC and the fact that he wants to see oil prices lower. He thinks that OPEC Plus should have done more to bring oil prices lower, which of course contradicts everything what they've been trying to do, which is to keep prices supported. And then says that he spoke to MBS, the Crown Prince of Saudi Arabia. In that conversation, they spoke about $600 billion worth of investment. Trump would like to see that go all the way up to $1 trillion. So all of that together, Tom, I think we can say for sure it's going to be a busy year.
Yeah, and it's been a busy week for you on the ground. Excellent work, Bloomberg's Jemana Paschi in Davos, breaking down what we've been hearing from Davos and the response from executives. And yes, an awkward moment for the CEO of Bank of America, Brian Moynihan, during that conversation. Back home in the US, President Donald Trump also made comments about lowering interest rates in the US and touched on his relationship with the Fed Reserve and the chair, Jay Powell, going forward. Take a listen.
You said that you would demand that the interest rates come down.
Well, I would put in a strong statement.
Do you expect the Fed to listen to you?
Yeah.
Are you going to talk to Powell about this and bringing the rates down?
At the right time, I would.
OK, for more, let's bring in Bloomberg's Valerie Teitel on the market reaction, because arguably, you look through the tariff discussion and China, this is one of the most important things to weigh up for these markets, is how much pressure Trump is going to put on Jay Powell and the Fed to lower rates, Val.
Exactly, Tom. And those comments from Trump did help a late-stage rally in the equity market. And we saw the S&P closing above 61,000 for the first time ever, notching a fresh record. But a lot of speculation on those comments coming out, Tom, about when it will be the right time for Trump to talk to Powell about lowering interest rates. Remember, perhaps it could come as early as next week. We have a Fed meeting next Wednesday where the Fed is expected to pause their cutting cycle and expected to go on an extended pause possibly until the summer. So maybe this heat that Powell will come under from Donald Trump could come sooner than expected. But I also want to focus in on his comments that he gave to Davos, because he did use some strong language when he talked about it, saying that he demands interest rates to drop immediately. And importantly, Tom, he wasn't just talking about the U.S. He wants interest rates lower globally. So it'll be very interesting to see what the market thinks of those comments comments. But aside from the politics, we have to keep our eye on the economic data because today is a big one for global economic data. We have the global flash PMIs coming out across Europe this morning. We get the UK number at 9:30, and I think this one is likely to be very interesting because the month of January has seen a lot of volatility in the gilt market and in the pound. It could come that these PMI data for the UK could reflect some sour sentiment.
Yeah, after UK consumer sentiment, of course, the GfK survey overnight pointing to further weakness there. Bloomberg's Rally Teitel, thank you very much indeed. And on that Trump story around the Fed and interest rates, you're seeing yields down around between 2 and 3 basis points across the curve right now. We have a great lineup, of course, of guests from the World Economic Forum in Davos. It's the final day today. We're going to bring you more conversations. This one's going to be really interesting as well. The CEO of Suntory, it is, of course, a major drinks maker headquartered in Japan. So a response there to what we've heard from the BOJ, the inflation story, as well as the broader global demand for some of those drinks products. And we're going to be hearing from the CEO of Germany's Merck. You have politics in Germany. We have a sluggish, stagnant economy. There's lots to talk about there as well. Stay with us. This is Bloomberg. Welcome back. Happy Friday. The Bank of Japan has raised its key policy rate to 0.5%. That's the highest level in 17 years in an effort to combat inflation. It follows a report showing consumer prices rising at a faster pace of 3% above the central bank's inflation target. Let's head over now to the World Economic Forum in Davos, where Bloomberg's Govenor Paschi is standing by with a guest who can certainly comment on the inflation story in Japan and the broader appetite for retail goods and drinks globally. Jemana.
Yes, Tom, thank you so much. Yes, that's right. Joining me right now is Suntory CEO and President Takeshi Niinami. I've got to say, given how cold it is, I could do with a bit of whiskey. It's probably too early in the day. Right. My bosses don't want to see that. Let's just start with the big news out of Japan. Another interest rate hike. So rates are sitting at 50 basis points now. This is the third rate hike in the past year. Rates are the highest level they've been in the past 17 years. As a business owner, do you welcome this decision? And do you think it was the right thing for the Bank of Japan to do?
I think this is very much expected. And we welcome this increase. The reason behind is consumers are very much affected because of the current inflation. I think consumers feel the inflation is hurting their life. The big factor is definitely weekend. So we should crack down the weekend to some extent, or at least that should not go beyond 160.
Yeah, what some people are talking about is the fact that today the Bank of Japan also raised their inflation forecast to 2.4% for this year. Do you think they're running the risk of being behind the curve?
Definitely.
So the Bank of Japan, you do
already
think
behind the curve, but I think it's intentional action by the Bank of Japan because they want to take a look at what kind of talks in business will be going on as for wages. And I think business will increase wages just like last year. And they confirmed that we business will take that action to support the life of the consumers. So that's a big reason for them to be confident to be able to increase the interest rates. But I think they need to do more.
Yeah. Are you planning on increasing wages in your
firm?
Yes, you are.
7%,
okay.
which is
7%.
Yeah, 3 years in the row. And I think big business will increase at least 5. So that helps Bank of Japan to keep increasing interest rates gradually. And the business should be prepared for further increase of interest rates.
At the same time, you mentioned yen in the first answer. The weakness of the yen has been a bit of a thorn in the Bank of Japan's side, and it seems as though it's very difficult for them to counter the weakness so long as U.S. yields remain high. What do you see as the outlook for the yen here?
Well, I think 155 is now, but I think below 150 or something, but not the dramatic increase of the value of yen. That's not expected by the business leaders in Japan. The reason is definitely Fed. Fed doesn't cut the rates.
Yeah.
So, and the drawbacks of increase of interest rates in Japan will be coming, such as housing loans. And so we have to fix those drawbacks gradually, such as SMEs will be affected. But definitely, increase of interest rates will benefit the Japanese economy.
Yeah. There are reports that the Prime Minister Shiba is actually going to pay a visit to President Trump in the U.S. at the beginning of next month. Do you worry at all about some of the geopolitical issues that are rising, say, with the case of Nippon Steel and the fact that the U.S. administration have been quite resistant to having a Japanese company take over an American company? I know you can't comment on specifically that company, but just from a geopolitical perspective.
I don't think so, because the deal of the Nippon Steel and the U.S. Steel is not based on economic security. It's totally politics. That's our understanding. And we will keep investing to the United States. We mean Japan, because the U.S. economy will be still very good and the best in the world. Only the key country for us to enjoy the benefits by investing investments. So our posture to the U.S. will be intact. So Nippon Steel deal doesn't bother for us to make a decision whether if we go to U.S. or not. Though I regret that President Biden decided not to go for it. But definitely, we will be in the United States, and we will keep investing to the United States.
Where are your biggest growth markets right now?
U.S.
It is still the U.S.?
Yes,
okay.
Definitely.
What signals are you seeing from China?
The consumption is waning further. So the confidence of the consumers is very weak. So China must get rid of the issue of real estate, ASAP.
Yeah.
Because we, Japan, experienced the same thing, but the magnitude is totally much bigger in China. So China needs to fix the real estate ASAP.
Yeah. And the domestic environment, obviously, there is a coalition government. How do you see the government policies impacting the outlook for businesses as well? They're obviously looking to pursue a slightly looser fiscal policy.
Well, I think Japan is facing a tipping point, and the government should encourage more labor mobility, because we are suffering from the huge labor shortage. So mobility of labor is the key thing to pick up economic outlook.
Are we likely to see more M&A deals, do you think, this year?
I think so, because more corporate governance will be seen in Japan, which means we will divest the non-performing divisions, businesses. I think we'll see more opportunities of M&A.
All right, we're going to leave it there. Suntory CEO and President Takeshi Niinami. A really interesting conversation there. And of course, on the heels of that Bank of Japan decision, Tom, great to get a local view.
Yeah, some really great lines in terms of the need for higher rates in Japan. Some really interesting lines in terms of the consumer squeeze over in China and the demand that he's seeing in the US as well. Bloomberg's Jemana Paschi, thank you very much indeed. There's plenty more coming up. We're going to do a deep dive into more of these comments from Trump around oil and interest rates. Stay with us. This is Bloomberg. Welcome back. Now some other stories making the news this Friday. President Trump has signed an executive order creating a working group to advise on digital asset policies. Some crypto bulls, though, were left disappointed. It didn't specify Bitcoin as the centre of a new national reserve. Trump was joined by White House advisor David Sachs, who says the order will help make the US the world capital on crypto. And Reliance Group is building what may become the world's biggest data centre in India. It's the latest in a blitz of global investments to capitalise on booming demand for AI. The company is led by Mukesh Ambani, is buying NVIDIA chips for the operation in Gujarat. There is plenty more coming up. This is Bloomberg. Good morning, happy Friday. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The yen gains after the Bank of Japan raises interest rates to 0.5%, the highest level in 17 years. The BOJ hints at more hikes to come. Asian equities gain as Donald Trump tells Fox News he'd rather not impose tariffs on China. The US president also urges the Fed to cut rates, saying he'll speak with Jay Powell at the right time. Plus, Trump tells Davos he wants OPEC to cut oil prices. We bring you reaction and top interviews from the World Economic Forum, including with the CEO of German pharma giant Merck. Let's check in on the markets then. European stocks take a bow, set for 8 straight days of gains as things stand, 7 straight days of upside, record highs for European equities, currently pointing higher by 0.5%, looking to build on the gains that we've seen over the last 7 straight days. Does this upside for European stocks have legs? FTSE 100 futures pointed to gains of 0.1%. The consumer sentiment survey overnight from KGaA pointing to further weakness here in the UK. S&P futures currently flat. Nasdaq 100 futures pointed to losses of 0.1%. US stocks also notching a record high by the end of the close on Thursday. Let's flip the board and have a look cross-asset then. The Japanese yen continues to be in focus for us, but the pound as well. So the Japanese yen strength, of course, on that interest rate hike. We listen out for the Governor Ueda over the next 30 minutes or so to see whether he gives any hints of further hikes in the pipeline. That suggests certainly to be, or seems to be, the positioning now in the direction of travel for a BOJ that's looking at inflation, the most recent print at 3%. The pound at 124 after weak sentiment survey coming through, but it's the upside that we're seeing for the pound, up 0.4%. More about the dollar story. Dollar weaker, again, largely tied to comments from President Trump. Brent at $78 a barrel, currently down 0.1%, as Trump urges Saudi Arabia to cut prices, and Bitcoin at 104,000, up 1.7%. Some executive action on the crypto space overnight in the US. Now to Germany, where the economy has contracted for a second consecutive year, of course, as it struggles to escape from its long period of stagnation. This, as the political tensions that sank the last government further hit confidence, investment and consumption. So how Europeans and corporates navigate these challenges, including, of course, uncertainty over China and the rise of AI, is a key theme at Davos, where Jemana Paschi is standing by with another great guest who can comment on these issues. Jemana.
Hi, Tom. Hi again. So joining me now is the CEO of Germany's Merck, Belén Garijo. It's good to have you with us here. You were just telling me that you're about to head off to a World Economic Forum panel right after this to talk about European competitiveness, which really has become a central theme in the last couple of months. And certainly you feel it with a big disparity between how American executives are feeling about the trajectory of the U.S. growth versus how European executives are feeling. What do you think Europe needs to do? I know this is a big question, to regain competitiveness.
Oh, this is well, first of all, thank you very much for having me. We have been speaking about European competitiveness for the whole week. Many people put it in the context of the US elections. I really believe that we have been talking about this topic for many years, and now it's time to go from debate to action. We have everything that we need to actually address the challenges that we have, among which a very highly complex and fragmented regulatory environment and political environment in which there is no unity between the Brussels level and the member states, closing the technology gap and creating an environment that is fostering innovation and growth for the industry. Obviously, we have spoken about the Capital Markets Union, which is absolutely key so that we can continue to invest in technology in Europe. 300 billion euros every year leave Europe to be invested somewhere else, simply because of the complexity of our environment, and this cannot be the case. And of course, the energy challenge that we have in Europe.
Yeah, well, there's a German election coming up, and I do wonder whether you think, it's too early because we don't know who's going to win, but it's likely that the Conservatives will come back in again, and there will be a change of government. Do you think there's going to be more focus on investment and fiscal spending and in introducing more pro-growth policies for businesses?
I think the environment in Germany has been always aimed to foster investment in the country. And we, as a European-based company, has invested very heavily in Germany and in Europe, signaling that we are very confident that the ship is going to be turned around. Let's not talk about elections, citizens will vote, and we will have a transition or not of government, so let's not speculate about what is going to be happening, but I insist that we cannot look at Germany in isolation. We cannot look at France in isolation. We have to really raise the level of political willingness to choose Europe.
Yeah. Well, I'm going to ask you a few questions about Merck. When you took the helm, you introduced this 25 by 25 policy, 25 billion euros in sales by 2025. We haven't quite got there. What are you going to do to drive
25 by 25 was an aspiration.
Yeah.
In 2021, when we called that aspiration, well, we were in the middle of a pandemic. Then we have several other major crises that actually influenced very heavily the market conditions in which we operate. So we continue to deliver on our promise of accelerating growth. We have already seen growth acceleration in 2024, and if you look at our Q3 data, we deliver not only revenue growth, but a significant growth of our EBITDA margin as well.
Talk to me about your drug pipeline. And again, I think many analysts in this space would love to see where you see the most promising drug pipeline potentials right now.
Look, I think in terms of revitalizing our pipeline, we need to step up on external innovation. For many years, we have focused internally on our assets, and of course, our pharma and other pharma business comes with attrition. The more options you have, the better place you are to deliver growth of your launches. And de facto, since 2017, the growth of our very successful biopharma business has been driven by the launches, not by the core business. Looking forward, our objective and our top priority is to increase the optionality of our pipeline, both in the areas of immunology and oncology. And we have already given good signals that we are capturing innovation outside of our company to fill our pipeline, to rejuvenate our pipeline, and to continue to drive innovation, which is the lifeblood of growth.
And China is a big market for you. I was just speaking with a prior guest about some of the weaker consumption signals that are coming through there. What are you seeing?
China is a super important market for us. It's our second largest market. Our main sector in China is biopharma, and we continue to deliver growth at and even above the market for some of the segments. For life science and electronics, China remains a fabulous growth opportunity. So we will continue to be investing in China and in Asia to be able to also get the right risk-reward position, but I am very confident that China will recover.
I want to round up with another big theme here in Davos as well, and that is the question of AI and whether you're actually using AI to increase your footprint without huge cost outlays.
Look, first of all, in terms of our footprint, we have been working and investing significant amount of capital in the last 3 years to diversify and create resilience of our supply chains. And we are much better positioned to be closer to our customers in any continent. Now, talking about AI, we have been an early adopter. And we use AI, the frame guiding us is to deliver growth, to accelerate innovation, or to allow us to be more efficient. So in that context, our main priorities when integrating AI has been drug discovery, to be able to increase the productivity of our research efforts. And also, I am quite proud and excited that we have been pioneering making our manufacturing operations much smarter, much more efficient. We are collaborating with Siemens to digitize our manufacturing operations, and we are already very advanced on this, becoming even a best in class in this topic.
Great. Well, we'll leave it there. Thank you so much for joining us. That was Belén Garijo, the CEO of Germany's Merck.
Germana, thank you very much indeed. Yeah, on the need for Europe to finally step up to all of those challenges. Germana Paschi on the ground for us at the World Economic Forum. Thank you. A lot more, of course, coming from Davos through the day. It's the final day, but do not turn away because there's so much more to listen into. On the Pulse, Francine Lacroix will be speaking exclusively to the First Round CEO and the CEO of Euroclear. She's also got an interview with the European Economy Commissioner, Valdis Dombrovskis, as well. Stay with us for that lineup from Davos. Now, some other stories making the news this Friday. UK household confidence has fallen to its lowest level since the end of 2023 in the aftermath of the Chancellor's budget. The latest survey by GfK shows that consumers are becoming pessimistic about the economy and their financial prospects. The decline in confidence comes with an economy that has slowed sharply since Labour won a landslide victory in last July's election. And the new French administration of François Bayrou expects to raise €2 billion this year from the richest individuals with a planned levy to counter tax optimisation. The measure is part of a package of around €52 billion in spending cuts and tax increases aimed at bringing the country's public finances under control. The Finance Ministry says around €12 billion will come from additional taxes on companies. Let's go back to Japan right now. Lines crossing from the BOJ. It's the presser for the Governor, Ueda, and so far he is not sounding particularly dovish after, of course, raising interest rates again for the third time by him and the team in this cycle. Currently, rates are at 0.5% after they hiked again by 0.25%. And he is talking about expectations that wages and those negotiations will continue in line with expectations for this BOJ. He's talking about Trump as well. So we have a line there from Ueda talking about global markets are calm after Trump's initial days. We know that was a factor that they were considering in the lead up to today's decision. Talking about real rates, expecting those to remain negative even with today's hike, saying the pace of rate hikes will depend on the economy and inflation. They have no preconception on the pace of rate hikes. Worth noting that the yen has strengthened in light of these comments, now currently up 0.7% versus the US dollar at 154.88. We're going to get more analysis from Valerie Teitel on that story in the next few minutes. More on the rate decision from the BOJ and these lines crossing from Governor Ueda. That's coming up in the market reaction. This is Bloomberg. Welcome back. More consolidation news in the Italian finance sector. Monte Paschi offering to buy Mediobanca in an all-share deal. The move confirming Bloomberg's earlier scoop. For more, let's bring in our managing editor for Southern Europe, who's involved in that scoop, Tommaso Ebhardt. Tommaso, so your scoop, the reporting from your team has been confirmed. What do we know about this potential tie-up?
We know that we didn't sleep too much last night, as we managed to report the news first during the night. It's quite a big surprise because Monte dei Paschi is smaller than Mediobanca, which is a larger rival. Monte dei Paschi is coming out from a very long restructuring process. The Italian government is still the biggest investor in Paschi, while Mediobanca is seen as the leading investment bank in the country. So it's somehow a surprise move. What is not surprising is that Mediobanca and Paschi somehow shares some investors, the Del Vecchio, the billionaire Del Vecchio family, and the Roman tycoon Caltagirone. They are the biggest, together, the biggest investor in Mediobanca, and recently they move on Paschi. The Del Vecchio has about 10%, 9.8%, and Caltagirone 5%. So the Italian billionaire families could play a very key role in such a move. We have to see which will be, the market response, Mediobanca response to an unsolicited offer. This is just a new chapter in a wave of consolidation in the Italian banking industry.
Yeah, I mean, as you say, the market cap differential between the two with the takeover target versus Monte dei Paschi is really interesting. I'm old enough to remember when Monte dei Paschi was on the naughty step and was the kind of troubled child or the black sheep of the Italian banking family. What are the potential regulatory hurdles? Is Maloney going to look favourably on this? Is this a deal that gets done?
So, so far we don't have any response from the Italian government. As you may know, the Italian government has been trying for a while to create a third big Italian banking group. Before Unicredit moved on Banca Popolare di Milano a few weeks ago, Italy had engineered the sale of a stake in Paschi to the Italian billionaires. So we can presume that the Italian government would look favorably such a deal, but we'll wait and see which will be the real response.
OK, Tommaso, thank you so much. After very little sleep, you broke the scoop, and now we have it confirmed. And we'll continue to watch how this story unfolds around a potential significant deal in the Italian banking space. Tommaso Ebhardt in Milan. Thank you. Let's get the latest lines now from the Bank of Japan's press conference that is ongoing. Some analysis with Bloomberg's Valerie Taitel watching the market reaction to this, with the yen currently at 155.53 versus the dollar. On these comments from Ueda, what stands out to you?
Well, look, we were on tetherhooks to see whether he would follow us up this hawkish decision with more hawkish comments. This wouldn't be the first time that we get a major head fake in between the decision and what he says in the press conference. And he started the press conference out hawkish. He did mention that he expects solid results from the spring wage talks, and the yen took another leg stronger on that. But since then, he has also said that he sees no preconception on the pace of rate hikes, meaning that he doesn't necessarily know when that second rate hike this year would be coming. And the yen did pair some of its earlier
Is he just giving himself optionality at this point?
You know, perhaps. He is also talking about uncertainties ahead, which might lead into that optionality and why he want to keep that optionality. The uncertainty on his mind is all about Trump and tariffs. So that is on his mind when it comes to that. But importantly, you know, what we got in that decision was very hawkish. If you look at how they upgraded their inflation forecast, it was a pretty substantial revision. 1.9% to 2.4% is their inflation forecast for 2025. A 0.5% increase on that call.
The forecast was increased from 1.9% to 2.4%.
Above their 2% target. So that is the very hawkish signal. And he's made comments that if the economy grows in line with their expectations, if the economy meets their forecasts, they will follow up with more normalization. So it seems like rate hikes are on the board for the Bank of Japan later this year. The uncertainties over the wage negotiations that take place late March, early April time, and then the clouding of the uncertainties around Trump and his trade policy are, the top of his mind for his further decisions.
What are we hearing from analysts in terms of whether this takes the brakes off the yen then? And we're seeing a pretty significant dollar weakness today as well. Other factors playing into that. As you look at the FX markets, what should you be considering in terms of how this dynamic plays out?
Look, I look at the FX market and I think there are a lot of people underwater. A lot of people having this move today is very painful, I think, for many out there who are dollar bullish. So the dollar bulls are really taking it on the chin overnight, whether it's the yen, whether it's the Chinese yuan, and then the move in the euro. All sides are coming, under pressure for those dollar bulls. But, you know, another leg in this dollar lower story could really be exacerbated by if we don't get any further tariff talks from Trump. Obviously, it's on Ueda's mind. He says they're not at a stage where they can speculate on the impact of tariffs. So that could really take this, this dollar strengthening, this whole paradigm around having a stronger dollar with tariffs. It could really take a massive hit. Remember, the dollar has strengthened nearly 8%, 7 to 8% since that Trump trade started. I mean, think about reversing a substantial part of that. Would be a big swing in the dollar. The yen being the second biggest currency traded versus the dollar would see those impacts.
All sorts of implications for Japan then, which of course is a major importer of energy, but on the flip side, a big exporter, of course, of product where stronger dollar would benefit. So we continue to watch those dynamics. We heard from the Suntory CEO as well, speaking to Germano Paschi on the ground at Davos, saying that they are increasing wages again for the third year in a row by 7%. That stood out, right? I mean, these are sizable wage gains in the history of Japan. Recent couple of decades. I mean, the idea you'd be getting 7% wages 3 years in a row would be something 5 years ago you wouldn't have thought would be feasible.
And remember, these wage negotiations mostly take place once a year, so we get more clarity on that at the end of March, and that'll be something key for the Bank of Japan going forward.
Valerie Teitel, excellent on these markets in terms of the market reaction to what we're hearing from the governor of the Bank of Japan. 155.36 right now, with the yen currently up just over 0.4% versus the US dollar. There's plenty more coming up. Stay with us. This is Bloomberg.
He's a deal maker, right? And if you're a deal maker, the first thing you do is you show your powerful stance.
There's the policy environment, and then there's the rhetoric. And I think we can actually get to a positive policy environment.
He makes big, broad statements. I'm going to buy Greenland. And then from there goes in with a more kind of practical deal approach.
That Trump is starting that debate is good. And he will always do it in his own way, which is with the door in his hand coming in. But that's okay, because that makes it possible for you then to come to an agreement.
If you're an entrepreneur and you're getting out of bed in the United States this week, you are full of optimism and energy.
The pro-business, pro-simplification, pro-growth agenda is very encouraging.
It's a pro-business. It's a smart regulatory environment. So everyone's thinking that's very good for business. But I think we're going to ultimately have to see what the year brings, because there's still more unknowns than knowns in the equation at this point.
The policies that are announced are not particularly growth enhancing, not only for Europe or for the rest of the world, but even for the US.
A trade war is not in the interest of the US and, of course, in the interest of the European Union.
Clearly, the rhetoric is something we're going to have to tackle.
World leaders, CEOs and central bank chiefs from around the world at Davos, of course, reacting to Donald Trump's first week back in the White House. And one area that has been targeted amongst many just in the last 24 hours by President Trump has been the oil markets, with a particular aim at Saudi Arabia, pressuring them, saying he wants Saudis to lower prices. In terms of the pressure, you have seen that this week, in fact. Oil has come off. It's currently at around $74. Not a lot of movement in the session today, but the expectation, of course, that he could continue to hammer the question of oil prices to get the pump prices down. But what does OPEC Plus do in response? Capital Economics says the break-even for US producers is around $60 to $70 a barrel. So those producers going to step up and undermine their own pricing is another question. And here's the US in terms of the amount of oil that's being pumped. At historic levels, under the Biden administration, you have not had a US pumping this much oil ever. And so how much more can those producers actually do on the production front? Flipping the board quickly in terms of FX volatility, that's faded. You've seen dollar weakness in the session today. Morgan Stanley is saying they are seeing now a plurality of investors building out maybe some differing views on the dollar. The opening trade is next. This is Bloomberg.